It's the same idea. If you can invest in a sports team or a player, well, you're going to buy their jersey, right? You're going to go to the games, right? You're going to post about them on social media. It's a flywheel that's very accretive for the athletes and teams as well as the investors, because as they're supporting it, their investment is rising.
Here we go, Spencer. Thanks for joining us today. This is another episode of the Constant Sports Podcast, and we have an exciting and interesting episode today, Spencer, to say the least. So thanks for jumping on, Spence.
Yeah, thanks, Connor. Super stoked to be here. It's been great working with you and Constant Sports, so excited for the chat.
Likewise. Yeah, and we're going to kind of dive into a few different facets of the sports, finance, ecosystem with ownership, athletes, sports investing, athlete tokenization, a little bit of your background, kind of what you've been building and kind of how you got to where you're at now. But let's kind of kick things off with really, for decades, fans could buy jerseys, they could buy tickets, trading cards, what have you, and then really to kind of actually get involved, with an athlete's success and career hasn't been, they haven't been involved much, right? And so kind of with your background, walk us through where you were at with Robinhood, what you built there, and then kind of how it led into being involved with athletes and athlete tokenization.
Yeah, sure thing. So I started my career at Vanguard in fund management, went to Robinhood in 2021, was a product and engineering leader at Robinhood, worked on a lot of interesting businesses and products, most notably co-built prediction markets, Robinhood's fastest growing business in history, did over $200 million in revenue our first year. The longest and hardest project that I worked on was building futures 0 to 1. That was over a year build with the team, and launched futures in the UK. So dealt with the FCA over in the UK, and it's interesting working with different regulatory regimes and launching complex active trading products in new markets. Built and shipped equity shorting 0 to 1 as well with the team. That was another 9 to 10 month build. Was working on Robinhood Ventures before I departed December 2025. We were getting ready for the RVI IPO, doing late stage private placements in pre-IPO companies, OpenAI, Stripe, Ramp, Airwallex, companies like that. And really just love building and leading product engineering, crew. I love business development side of the business and operations. I've worked across all the verticals, legal and compliance as well, and joined my co-founder and CEO Ben Turner in December 25. Been with Market for 6 months. Living here in Texas now. I was building derivatives in Chicago. I'd go out to Menlo Park, California a lot. Of course, Robinhood's headquartered out there. And now in Texas with my beautiful wife, amazing 4-year-old son, and having fun building the future of sports and finance here at Market. So excited to get into what we're building now. I don't want to talk for too long without you interjecting, but we're building, as you mentioned, the infrastructure for athlete tokenization, sports tokenization. So excited to chat more about that.
Yeah, for sure. And kind of as you left Robinhood to come, help build Market and work on that side of things and kind of help, when did you kind of first realize athletes, kind of this whole ecosystem, building infrastructure, kind of this investable asset class, kind of, you mentioned it was December you joined. So where was that period where you're like, okay, lights out, let's rock and roll, let's go down this path?
Yeah, I mean, Ben Turner, the CEO, pitched me on it. We had a mutual lawyer, so I co-founded another business, and former securities counsel at Robinhood. He's now a partner at Gusmer Updegrove. Not sponsored, and
yeah,
and Ben had retained him at Market, and Braden told Ben, hey, you should bring Spence over to lead product and engineering. Ben pitched me on the business. It was crazy and complex, challenging enough. I knew the market was there, and so I took the leap of faith. And when did I know, part of your underlying question is when did I feel bullish, right? What was the trigger point for feeling bullish enough on sports tokenization to take that leap? Really, I felt the conviction before, the conversation with Ben, because I've seen fantasy sports grow like crazy. Multiple different sports I've seen grow like crazy, whether that's women's basketball, women's soccer, the NFL, wrestling. I've just, seen it over the past couple decades. And having built prediction markets at Robinhood, we had prediction markets in every vertical, right? We had it in politics, sports, weather, current events. There was all of these different things, but obviously I was looking at the dashboards, right? Because I was on the team, and the majority of volume was in sports, and you see that, across prediction markets, generally speaking, that's just where a lot of the fan engagement is. And so I knew that there was product market fit for most things when it comes to sports and finance at that point. This was a novel asset class, really, because with prediction markets and sports betting, fantasy sports, really there's no athlete side engagement, right? These are products that users can engage with in various ways, but the athlete's not engaged in the marketplace. Right. So what was really compelling about market was, okay, we're going to purchase a percentage of an athlete's income, generally 3 to 10 years, generally 10 to 49%. We're going to securitize that and tokenize it and list it on our platform and allow fans to become investors in athletes, sports teams, athletic departments, right? Get exposure to not only private markets, but their favorite athletes in sports assets, which is the other piece of the conviction. In building Robinhood Ventures as well, I've always been passionate about alts. I did the CFA thing and specifically the private markets pathway. And I think retail investors have largely been gated from investing in a lot of private markets opportunities, right? Sure. There's a red carpet for accredited investors and institutions. There's a velvet rope. And I've spent my entire career removing that velvet rope. That was building futures for retail, building equity shorting for retail. Look, hedge funds and institutions had access to those products for decades before retail. Well, I walked in and I threw the velvet rope on the ground. And I said, all right, everyone should have access to these products. And this new novel product, it's the same way. Like, look, owners of teams have access to athlete and sports upside. PE investors have access. A lot of times even they haven't. Just recently the NFL changed rules to where teams can be up to 10% owned by PE, right? So now you have 32 teams, 10% ownership. That's democratization in a sense, but even still, it's targeted at, your PE firms like Arctos or these other organizations that are actively taking stakes in teams. And so with RVI, right, on the Robinhood Ventures side, it's traded at 2 or 3 times NAV, meaning the demand is massive. They immediately had 150,000 retail investors purchasing RVI, which really just signals the retail investor in that cohort is really seeking private market opportunities. They're looking for alpha, right? We're sophisticated enough now. We've traded in index ETFs, right? We've done thematic ETFs. We've bought individual names. We've traded some options. We've traded some crypto, right? But now, what about my favorite athlete? What about my favorite team? I can't buy that. I haven't been able to buy that, but I want that exposure. We're really coming into the marketplace and saying, we'll create that opportunity for you. We'll build it, and we have faith that if we build it, the people will come, and that's what we're doing.
Mm-hmm. Yeah, no, well said. I think it kind of, I guess, like the broader picture is kind of this investable asset class, as you touched on, and kind of the athlete being the kind of the missing link, you could say, with, you're saying fans are, get involved in sports betting. NIL is a big thing, right? People are putting money into collectives or donor bases, right? And then really not seeing any return on that. And I know kind of one of the product fits and like the differentiator market is kind of a win-win for all parties involved. So kind of what does that mean as you've been building that out, and why is that such a big, inflection point for the company to show like, it's a win-win. You're not just throwing your money into a pit.
Yeah, it's critical. And you bring up a good point, and I'm glad that you called out the, collectives, for example, because, wouldn't it be so cool if a collective owned shares of athletes from their organization, right? If you're part of the University of Georgia collective, and you want to invest in the University of Georgia athletic department, maybe you can buy shares of that athletic department or specific athletes that are going through the program.
Right.
That's a really interesting concept, and we love the idea of having those investors, on the cap table, if you will, investing in their favorite athletes. And the inflection point and why it matters that it's win-win is because we're operating a two-sided market. Supply side is athletes, athletic departments, sports teams. And look, if we can't create a product that keeps the supply side of the market extremely happy, then we're not going to have amazing products to offer on our platform. And that's what keeps, right, the buy side, liquidity pool,
High side.
user side of the market, right? If we've got 10 million users on our platform that are investing in their favorite athletes, athletic departments, and teams, we've got to make sure these instruments are securitized, tokenized in such a way that drives investment returns for the investors, right? People stay on platform because they generate returns. I've seen it at Vanguard, I've seen it at Robinhood, and I've seen flows between financial institutions, and generally people stick to products and platforms that they make money on. So that's a goal of ours, right? We need a marketplace that is a win-win. It needs to create a positive outcome for the issuers, the athletes and organizations, and it needs to create positive returns for the investors and fans on the platform. And that's really, P0 for the product engineering and business team is creating that.
Yeah, I'm with you. Well, and I think also too is, we've been talking about the fans a lot. I think the fandom has really kind of changed in the past, a few years really, where before it was the fans, you buy tickets, you get nothing, and you like it, right? That's kind of what it's been, and ticket prices are getting more, and a jersey for your favorite NFL player is $190, and the fans are kind of looking around now saying, what gives? So I think these types of product fits are, showing the fans, there's something out there for you to kind of also gain exposure to your favorite team, your favorite player, and really helping the entire ecosystem as one, but then also with the athletes. And so you mentioned previously about kind of the athlete, you're buying kind of a portion of that, the contract. So kind of what does that mean? If I'm an athlete, how does that involve me? How does that work? Kind of where does the athlete fit in?
Yeah, I mean, the athlete has a relationship with market in our team. So we offer the athlete a deal. It's a non-binding LOI is what it is. And it outlines a number, right, an offer to the athlete. If it's interesting to the athlete and their agent, their financial advisor, their lawyer, and their family, right? They need the athlete's whole support system to be bought in. They can sign that LOI. We invest in final underwriting, legal documentation, and SEC filing, right? We need to have an athlete stock company or SPV formed, right? We enter an agreement with the athlete to form that special purpose vehicle that will become the issuing organization raising the capital. And then, we pay the athlete as well during the life of the arrangement. We pay them an endorsement arrangement and then an executive compensation arrangement. So they sit on the board of this athlete stock company. They're becoming young financial executives while playing, right? It signals to the market that they do deals, that they're an executive, right? We're seeing that trend in the market anyways. What better way to train up to become a EP, right, for a PE VC fund for future sports finance than to have your stock offered while you're an athlete and learn what it's like to be part of a board, right? And when the fans buy this athlete stock, the SPV, the athlete stock company, wires the funds to the athlete. That's the whole cash advance, right? The athlete's de-risking future injury risk, future career risk, future earnings risk, and pulling that in, and they can reinvest those earnings in their career, right? Maybe some of these athletes aren't, the difference between being a world-class athlete and going amateur and having to, find a job in the marketplace, that difference is being able to invest in themselves, in their career. And so that's how they tie into it. And then over the course of the partnership years, the athlete, of course, pays the agreed upon percentage of their income to the athlete stock company, and the fans and investors are excited about that because they've purchased the stock, before those earnings come in hopes that the athlete continues to perform better and better over the course of their career. A win-win situation looks like athlete has a great career, makes a lot of earnings, the fans and investors, investment performs well, the athlete becomes a huge success because they were able to invest in themselves early on and provide the launching pad they need to become a world-class athlete. And they should see more brand endorsements. They should see more engagement with Fortune 500 organizations because they're signaling to the marketplace, I'm a financial executive, I have a stock company, and if you're interested in investing in my career, here's an opportunity to do so. That's huge for the athlete.
Yep. Shows them and it kind of shows like they're putting in the work, right? Like I'm not just, over here on the sideline. I'm in the game. I'm playing on and off the field, obviously. And then it just kind of makes me think about this overall kind of trend of tokenization. And you're got a big background in that. So what do you think is, I kind of phrase this, what do you think is like the most misunderstood thing about just tokenization in general? And that kind of, we can tie in like Polymarket and those guys. Like, what's something that the public seems to not like, but it's misunderstood?
Yeah, I would say the most misunderstood thing about tokenization is it's really just the plumbing. It's the pipes, right? I've been in the financial industry for a long time, as you mentioned, and with traditional equities or derivative products, you have clearing and settlement infrastructure that supports this financial system. So for the tokenization movement, really it's a new revision of the clearing and settlement architecture, because with this updated blockchain ledger technology and the way in which decentralized finance operates mechanically, you have real-time settlement, real-time clearing. And so for institutional finance, that's really attractive because historically you've had daily batch, right? And that's why money sweeps once per day. And this is over a lot of people's heads, but that's how banking, equities finance, and derivatives finance works, daily batch jobs. Because when that infrastructure was created, you didn't have real-time settlement and clearing.
Yeah.
So tokenization is nothing more than the latest plumbing technology that supports the financial system. It's the infrastructure, the picks and shovels. And so I think there's a lot of hype around it. Generally, anytime there's a potentially speculative asset or an emerging technology, there can be a lot of hype, and with that comes some misinformation. But as what I would consider a sophisticated builder in financial technology, I don't see crypto and tokenization as a hype thing. I see it as a novel and better technology to support the infrastructure that I need for my businesses. And that's what it is. And people that are bullish on it, I think the ones that have the right mindset are the ones that are bullish on it because they understand product and engineering leaders like myself will continue to lean in to tokenization as the building blocks of my businesses and my products and platforms. And that's why you see BlackRock investing heavily, right? New York Intercontinental Exchange, which owns New York Stock Exchange, right, investing heavily. NASDAQ investing heavily in digital assets because these institutions recognize it as a better clearing and settlement infrastructure strategy. And so, that's my take on tokenization and, behind the veil, what's the reality.
Right, yeah, and I think you brought a good point about kind of the infrastructure and the pipes and the picks and the shovels and whatnot. And I know as many of you, if you follow Spencer on LinkedIn, he's posting a lot about kind of the background work with building and market and the I guess like I said, the plumbing that you've put in to market to kind of get to where you're at, and then to now exceed expectations and continue to build in 2026. And as we're headed into the summer months here, and you came in December, so 6, 7, 8 months, I guess, working on here before we release this, is what's kind of been something that stuck out to you that you were like, all right, this is a little bit more difficult than I anticipated, or has it been smooth sailing, or kind of somewhere in the middle?
Yeah, it's a good question. I mean, there's certain things that I've done many, many times that are familiar. Building technology 0 to 1, that's my sweet spot. So, doing commercials with T0 and then going through helping build out T0 Connect and being the first distributing broker-dealer that is connecting to their ATS via API to support trading. That stuff would, make a lot of non-technical founders fall on their face. fortunately, given the background at Robinhood building there, that's been easy
Right up
peasy.
your alley. Yeah.
Right? We've done what would take most teams, 2 years and $10 million. We've done it with a very lean team, and we've spent less than $800,000 across the entire business. Right? So that's a tech moat. And then regulatory, same. I mean, I've got 9 licenses, including being a Series 24 principal. I've been through many CFTC, NFA, as well as SEC FINRA exams and getting firms licensed 0 to 1. So also would make most founders fall on their face, but because of that background, and then we've got a rock star CLO, Roberta, who comes from FINRA SEC, that's been much more smooth sailing than other startups may experience.
Right.
The part that's challenging for any startup is funding, right? You've constantly got to keep gas in the rocket ship, right? You're focused on building the business, but also you've got to keep gas in the tank, especially pre-revenue. So that's been a different challenge, right, that I didn't face at Robinhood, right? It's not building technology, it's not building regulatory moats. It's just 0 to 1, fundraising, doing a lot of pitching, talking to a lot of investors. We've had a lot of traction, and the feedback's been very positive. It's just a new muscle movement. So I guess that's my take on what's been easier, harder, about what I expected.
I love it. And then kind of in that note, I just in sports we've seen a lot of team ownership, athletes. Travis Kelce just invested in the Cleveland Guardians. He's like a part owner now, and then we've seen AI making a big push. And so kind of on the note of that fundraising, I guess the evolution of sports investing has drastically changed in the past few years. And so kind of where do you see kind of market fitting in that mold? Team ownership, player ownership, AI, kind of somewhere in between, I'm assuming.
Yeah, also a good question. AI is a horizontal layer, in my opinion. Every organization should be using it. We use AI aggressively. We've built an AI underwriting model that we've actually, it was created as an internal tool, and we've productized that, and now we can sell it to agencies, teams, scouts. So if anyone's interested in using the Market Intel product, feel free to reach out. But outside of AI as a horizontal enablement layer, I see us fitting into the marketplace really as a capital market service provider to athletes and institutions, right? We empower them to access capital because we consult on the structuring of securities. We do the structuring. We do the regulatory filing. We offer the security on our platform of essentially raising the capital, and then we support the technology for secondary market trading. And so it's 2 pieces. For the retail market and institutional market, we're a democratization player. We're providing access to assets that they have not had access to. That's a massive disruption, positive disruption in enabling access for the marketplace. And then, of course, supply side, right, the issuers that desire and need capital to continue to grow and reinvest, it's an infrastructure asset that hasn't previously existed, which has caused, quite the challenge with raising capital. It's slower and more expensive, right? If you can create a marketplace with 10 million plus investors ready and willing to invest in sports assets, right? When an organization or individual needs to raise capital, going directly to that liquidity pool and immediately receiving the funds, because subscriptions happen quickly, and all of a sudden what would have taken 2 years can now be a 30 to 90 day process. That's a really attractive value proposition for supply side. So I think we're really, really building something exciting. And I think with the tailwinds, right, which are the buy side of the market continuing to show increasing desire to not only engage in sports, but invest and own sports assets. And then, supply side, these organizations and athletes are benefiting, right? Their wealth is increasing significantly because that market is continuing to grow. It's a $185 billion market today, sports, right? And it will continue to snowball. My co-founder and CEO, Ben, and I believe, it's $1 trillion market. If we zoom out and look at, what does 2040, 2050 look like? It's $1 trillion market. And so, there's huge opportunity and tailwind, broadly speaking. And if we can be a critical infrastructure player to enable that market growing from 185 billion to $1 trillion, right? And we can confirm those numbers because hopefully the $1 trillion that's invested in the markets largely on our platform. So it'll be really exciting to see the growth.
Yeah, no, I'm with you. And with the growth and kind of the tailwinds you mentioned, I just think it's, it sounds like a big number, but then when you kind of step back, we haven't even really, counted much of college sports and, into that picture, in that equation with, like Virginia Tech just divided their athletic departments, the 80s over here. Now they have a GM who's basically, a PE manager for the school. And that just opens a whole other can of worms of kind of as what we talked about before. But, could you potentially invest in a school? Could you, invest in, say you buy, a share of the women's soccer team before the season starts and they make a run. Like there's just so many different avenues where, money and investment and these different layers can be built into within sports, and, kind of building that out as, sports evolves. And like I said, sports being an asset class, in my opinion, has really, kind of hit the ground running in the past 5 to 8 years, and really opened it. I don't know what you think about that, but that's just kind of what I was talking out loud there.
Yeah, I agree with you. I mean, it's growing like crazy. There's a lot of emerging sports too, like, we see the pickleball. Pickleball has become a massive opportunity, and some have already cashed out right on that opportunity, the early adapters. And we've talked to a builder in the slam ball space that's trying to build out slam ball. Women's soccer is growing, international football, right? Soccer.
Yep.
American football is becoming an international thing, right? American football has, I think, got 8 different international games this year. And so the market itself is continuing to grow and blossom. I think having the capital markets infrastructure in place allows that to happen, right? Growth costs. And so, and you need to finance that cost. And so having good financial infrastructure supports that continued growth. And not just America, but the world loves sports. And sports is something that, it goes back for many, many, many centuries, right? And it's a global thing. I think it's just really exciting to be a part of, and I'm excited to see where the future goes.
Love it. Yeah, no, I agreed here. And then kind of where is, what's the evolution of market? Currently, where's everything at? Where are you guys pushing forward to? What should the listeners, fans, people, watching, what should they expect here in the next few months and years?
Yeah, I mean, we're going to launch this year. We're waiting for FINRA to approve what's called our new member application. We're going to be an introducing broker-dealer and placement agent. Maybe that matters to some, maybe not to others. It's what allows us to do what we're doing legally.
Play the game, yeah.
Right? Selling securities, supporting secondary market trading, right? At the end of the day, we're a financial institution. And so really at this point, we're just waiting for regulatory approval to go live, which we expect to happen this year. And we've got athletes that have signed LOIs. We're working on, the legal and the SEC filing so that we can, of course, legally offer those instruments. And then we're talking to a lot of teams too. You mentioned Virginia Tech. We may or may not have talked to them. We've talked to other, universities and conferences, as well as teams across every different industry. NFL, MLB, WNBA, soccer, and really several of our what's called mandates that we're working on are teams or emerging sports businesses that are trying to raise between 5 million and 500 million, right? Our biggest potential project right now it's a $1 billion project. They need help raising 150 million of it. And so that's where we come in, and it's really exciting because now, market fans and investors on our platform will be able to purchase part of this. It's a soccer team. I'll leave this
crowdfunding type of thing.
And if they can buy the soccer team, right, it'll be traded on our platform. It creates this massive fan investor base on market. So rather than them raising the $1 billion from just PE, right, you get the check, but you don't get this fan investor base, right? They're taking 800 million, right, from state, municipalities, grants, et cetera. 50 million from their own PE angel investor network, and then we're helping them with the 150 million, right? And that's where fans and investors will be able to get that exposure. And so I think we'll continue to see that trend where athletic departments, teams, emerging businesses in the sports industry will do sort of like, split offerings or full offerings where part of that offering is funded by retail investors and fans because that engagement's huge, not just for the business, but for the community. So, I mean, look at AMC, right? AMC became sort of a hype stock, and it really juiced AMC again, and it allowed, the corporate
Brought it back to life.
yeah, the corporate organization and business to grow, because if you have people with skin in the game invested in AMC in this story, right, they're going to start going to see movies at AMC. They're going to tell their friends to download the AMC app, hey, you need to engage with this business. They're going to buy popcorn when they go to the movies. It's the same idea. If you can invest in a sports team or a player, well, you're going to buy their jersey, right? You're going to go to the games, right? You're going to post about them on social media. It's a flywheel that's very accretive for the athletes and teams, as well as the investors, because as they're supporting it, their investment is rising.
Going up and up and up and up. Yep.
All rising tides rise all ships is the idea.
Yep. Great. And then where can listeners, viewers, where can they find Market? Where can they, follow your work? LinkedIn, all the good stuff.
Yeah, look, we're live across all social platforms: LinkedIn, Instagram, X, etc., TikTok. Allie, who runs our social media marketing, does a great job. You'll see her on there. We do weekly giveaways, so signed jerseys, helmets, balls, etc. So if nothing else, join the waitlist and refer friends, just so that you can be part of the giveaways. We have a really exciting giveaway. It's going to be Super Bowl tickets. That's the biggest one, and that's going to be, once we launch and go live, we'll announce who ended up getting those tickets from the referral list. So you can join the wait list at sportsmkt.com. You can also look up investinathletes.com. All roads lead to heaven. They'll take you to our platform. Join the wait list, refer friends. Again, we do giveaways, and follow us on socials to see what's coming, and we'll be announcing our first investable asset soon. We'll soon be announcing what players fans can invest in, what potential organizations they can invest in. So you'll want to follow along. It's going to be a really exciting time to, explore this new asset class.
Yeah, you heard it here first. So everyone go check it out. We'll link that all in the description and when we share it and whatnot. But yeah, Spencer, thanks for joining today. And I always like to put the guest on the spot here. Is one last parting piece of advice for those, building, creating in the sports and the tech industry who are watching.
Yeah, great question. Build long-lasting moats and do the boring stuff, right, in your respective vertical. Don't just chase what's trendy, because it's likely not everlasting. If you can conceptualize a business in a product and a service that will persist the continuum of challenges, then you've got a real business there. And really, I think you can do that and create that moat by finding the wall that everyone quits at, and then climb that wall. That's the moat, because where all of the competitors drop out, and this is generally regulatory, technology, or relationship based. So find those walls, climb the walls. I prefer to build picks and shovels and infrastructure for industry defining things. If that kind of thing interests you, it's generally a lucrative approach. So keep building the future. Perfect.
Way to end it. Way to hit a homer there. Knock it out of the park. And we appreciate you jumping on today, Spencer. And for the listeners and viewers, it's been another episode of the Constant Sports Podcast. And we'll see you guys next week.
Thanks, Connor. Cheers.